Hi, everyone, and welcome to another episode of Adapt and Thrive. Today, we have two phenomenal guests. We're in for a treat. Our guests are from the Real Estate Investment Network, REIN, which is Canada's #1 source for education and unbiased investment research. We've got Patrick Francey. He's the CEO of REIN, and Francoeur, and he is the Chief Growth Officer of REIN. Gentlemen, welcome to our episode today. Please introduce yourselves, share with us a little bit about you as investors and what you do in REIN.
Thanks, Dalia. Appreciate that. Appreciate the intros. But Patrick and I, we always do age before beauty. So I always let Patrick introduce himself first.
Well, listen, I am Patrick Francey. I'm the CEO of the Real Estate Investment Network. Been part of this community for well over 20 years. My background is as a business owner, which I've been since 1984. I started investing in real estate back in about 2000 when I came across the Real Estate Investment Network. And my journey of real estate investing and business is really a single family, some multifamily, light industrial, and primarily investing in Alberta, a little bit in British Columbia. And over the years, I evolved and kind of shifted and changed and became the CEO and primary owner of the Real Estate Investment Network. And that's what we do today, is support investors in creating a financial future as part of growing a diversified portfolio and using real estate to gain that kind of stability, security, financial freedom, if you will, as we go forward.
Fantastic.
For those of you that don't know me, my name is Francoeur. I've been an entrepreneur for 20 years and been an investor for 10 years now, real estate investor. When I started, I joined the Real Estate Investment Network as a member, as a client, and learned from the greats that came before me. And today, essentially, I own and manage just coming up to 200 doors in Peterborough, Orillia, Lindsay, Huntsville, Hamilton, as well as Calgary, Alberta. And it's because of REIN, the Real Estate Investment Network, that I've learned everything I've learned. And now, as the CEO of Visture Property Group and the Chief Growth Officer of REIN, I get to give back and educate those that are coming up behind. So really glad to be here, Dalia, and excited to do this.
Fantastic. So, gentlemen, you are investors yourselves, and you deal with thousands of investors through the Real Estate Investment Network. And we all know by now the environment is shifting, rising rates, changing valuations, tougher mortgage qualifications. What tips and strategies are you recommending or personally deploying yourselves to adapt and thrive in this environment we're in?
Do you want to take this one to start, or do you want me to?
Well, I think, I'll start. I think, Dalia, it's really, I think now's a good time. One of the things that we teach at the Real Estate Investment Network, and I think real estate investors right now, it's really time to evaluate, your timeline and what you want real estate to do for you. A lot of people don't even ask themselves that question. They don't even ask themselves, what do I want real estate to do for me? What is my objective with real estate? What am I driving towards? And really, if you get grounded in that, and if you consider your timeline, it's going to change how you go through this current period we're in. There's no doubt the market is in chaos from certain perspectives. And I think that if your timeline is long enough, and when I say long enough, I mean 5, 7, 10, 15 years, I think right now is a phenomenal opportunity to really be looking at some great deals that are going to be coming down the pipeline. It's investors, I think, that have a really short timeline. They were hoping to cash out in the next 2 years, or they were looking to do quick flips, or they weren't really, they weren't educated and they didn't understand the economic fundamentals, which I'm sure Patrick will touch on. If you're kind of operating in the dark, right now is a very scary period for you. But I can tell you for myself, understanding the economic fundamentals, understanding where this market is going, and understanding where we are within the market right now, I'm actually nothing but excited right now. I think it's awesome opportunity for a lot of investors with the right timeline that have the right objectives. So that's my perspective right now. Dalia, Patrick, yours?
Well, I think, ultimately, Dalia, as you've heard us say many times over the years, is that real estate is regional, it's not national. And so, for example, you guys are out in Ontario, I'm out here out west, British Columbia, Alberta. So my perspective of what's happening in the real estate world is different only in that regionally things are different than what's happening currently, for example, in Ontario. I think investors, first off, just need to step back, take a breath. understand that this is a current period of kind of chaos, and the chaos is driven by some really big macroeconomic things that are happening in the world, whether it be Ukraine and Russia or China, Taiwan, what's happening in the EU. I mean, there's a lot of dynamics that seem to be threatening us. For investors, the first thing they need to do is just, like I say, take a breath, look at what their objectives are, as JG pointed out, look what their timelines are, and then look regionally at what's happening. So, we like to say there's not really any bad economy per se in terms of investing in real estate. We don't change what we change is our strategy. And we look at it through a different set of eyes. I mean, right now, everybody's being intimidated by rising interest rates. But as you know, Dahlia, when you look historically at interest rates, we're still very low. We're at historical lows to this day. I mean, when I bought my first piece of real estate, and I think it was a 14 or 15% interest rate. I was so happy when it dropped below 10%, 9.75%. Like, I'm just like so happy. And when I started investing, I think my first few doors, I was paying 6.5% interest rate and having to put down 25%. So 20% back then wasn't even an option. So the point of all of this is that investors can get very intimidated by what's happening in this market. But if they pull back, when in doubt, zoom out. Look at what your strategy is, look at regionally where you want to invest. And because the world has shrunk with technology, guess what? You can invest anywhere in the country and do it quite easily these days.
True. I'm going to ask you a question, actually, out of curiosity. For investors who are experiencing, so you talked about opportunity, you talked about the fact that real estate is regional and there are opportunities depending on where you're looking. But for investors who own portfolios right now and they are experiencing pressure on the cash flow of the portfolio as a result of rising rates, or let's say someone was going to flip a property and now they have to hold on to it longer because they're not getting the price. What are some of the things that they can deploy right now to ease up the pressure, in your view?
Great question. Absolutely great question. I think, Patrick probably will speak to joint ventures, which is a great strategy, a good tactic. What I'll say to it, though, Dahlia, is right now, and Patrick and I were on a speaking engagement actually just yesterday with a group of investors from across the country. And, right now is really a great time for investors to focus on the operation of their business. Quite frankly, Dahlia, and you know this, and I know those people listening, they'll appreciate this, which is, for the last several years, and I'm talking 3-4 years, investors haven't had to be very smart. The investors have not had to be very good, and they haven't had to be good operators to make money in this business. Listen, people have gotten, made a lot of money by doing not a whole lot in the last 3 years. And right now is the kind of market where you have to be good. You have to operate better than the next guy or gal. You have to be better at sales and better at leasing, and you have to provide a better level of customer service. Can you get superior rents than the market? Yes, you can if you're better than the market. And I think a lot of investors forgot that, just like a lot of real estate agents, and I'm not picking on agents, but a lot of real estate agents are in the same boat right now where, for the last 3 years, they've made money hand over fist without even having to work very hard in terms of like sales ability. Well, that's changed for real estate agents now, just like it's changed for investors. So for me, as someone who manages close to 200 doors and has an incredible team, my message to my team, as well as my message to my investors, as well as my message to the people listening to this, is focus on that operation side of things, because it can make a massive, massive difference. So, and I know Patrick will speak to JVs, I'm sure.
Yeah, there's a couple things around all of that. First off, I guess it's degree of pain that somebody might be feeling. Let's face it, there was a lot of mistakes made because, as to JG's point, when the markets are all, when boats are rising, all boats rise on a high tide, and it seemed like nationally it was just one big high tide, and they talked about how many more investors there are in the market, and I think they could rephrase that and say how many more speculators there were in the market versus investors. With the Real Estate Investment Network, we beat the drum every single meeting we ever had. Buy for cash flow, be cautious in pre-construction deals. When the music stops, of course, where's the chairs and where are you sitting? So the point of this is those with existing portfolios, First off, operationally, make sure you're tightening up. Make sure that you have access to capital. This is not the time to over leverage. This is the time to actually kind of hunker down, look at operationally, to JG's point. Is there a way that you can generate more revenue in a given property? Could you furnish it, for example? Can you suite it? What else can you do to generate a little bit more revenue for that property? Now, if you're really behind the 8 ball and you're bleeding cash and you can't sustain this for an extended period of time, then this is where a joint venture partner can come in. Somebody with capital that's willing to park that capital and support you along the way. I've seen I know this is just so bizarre, but years ago, I think it was about 08, when the last kind of crash happened, 08, 09, there were some very kind of savvy investors who got into a bind, and they were upside down, let's say $500, $600, $700 a month cash flow. That's a lot to be bleeding if you've got more than 1 or 2 properties. What they did was they walked up to some capital partners and said, here's the deal. Take over my, no money in, just cover my shortfall every month. I'll give you X amount, a percentage of the equity in that property. And some of those 50 and 60%. And so guess what? They got rid of, it was a creative way to get out of trouble. Now I'm talking in those cases, they're pretty desperate, right? So that was just one effective strategy. Cover the shortfall every month. That's all I want you to do. I'll give you 50% of the deal, 40, whatever the numbers were. But then guess what? The pressure was off that investor and the capital drain that they were experiencing. And somebody with capital who said, no, I can cover that. A few $100 a month, it's worth it to me.
Yeah, I think another thing, Dahlia, and this is a Patrick just gave a fantastic example there. But one of the things, and actually we just had this happen recently. Patrick, we're on a call with an investor, and this investor is very worried. Very similar question to what you're asking, Dahlia, and the investor had actually bought 2 properties essentially at the peak. They were now losing money every month. They're feeling the pressure, and really they had made some bad decisions. Now, what's interesting about this is once Patrick and I started digging with this investor, she really wasn't relying on experts. She wasn't a REIN member. She didn't have that expertise. She didn't have that that education that really she should have gotten. And it's not too late. She should get that education. But my point is that she was actually caught up in the emotions of what's happening right now. She was caught up in the headlines, and there was actually more fear there than actually was warranted. When we dug into it with Patrick and I, it turns out she was only negative cash flow a couple $100 a month, and she could easily carry it. So she was actually scared of what the future was going to offer her without ever getting grounded in the fundamentals. So if there's people feeling like that right now, my advice to them, Dahlia, one of their first phone call should be to someone like you, someone who's a trusted mortgage, a broker who's investor focused, who can look at an entire portfolio and maybe restructure 1 or 2 things to help everybody. Because the odds are is unless you're just starting out and you only have 1 property and you happen to make a badly timed decision, like you bought at the peak, people with a portfolio of 2, 3, 4, 5 properties, the odds are is it's not their entire portfolio that's under stress. It's 1 property that's causing them a lot of stress. But if you look at the entire portfolio, it could be restructured actually quite relatively easy. So those are my thoughts, Dahlia.
That's a fantastic point, because often clients look at the problem. They don't look at, okay, what are my options outside of this problem? And when you look at the big picture, to your point, and the portfolio, there are opportunities to restructure. If there is pain here, how can we ease it up by doing something maybe, somewhere else? So that's a great reminder. Thank you.
And and just to add just quickly, something that happens, Dahlia, and I think JG hit it right on, sitting down with an investor-focused broker professional like yourself, you look at things differently, and you start to, like, for example, I remember, once again, going back into some of the dips and, challenges I've seen over the years with investors, but even a simple asking the bank, can I re-extend my mortgage to 30 years, 35 years? What can I do to bring my payments down? And the banks are open to those conversations, and you don't know how creative that they're even willing to get, but you have some ideas. So these are the things, this is the time to not be insular and not ask for help. This is actually the time to reach out and say, how can I solve this problem?
100%.
Yeah.
Thank you for these tips and strategies and perspective. Right now, what I'm seeing is there are investors who are panicking, and there are investors who are excited, and then there are investors who are just sitting on the sidelines waiting. What are you personally doing right now, and what are you observing within the investment community? Which bucket would you say they're in, and what are your views on what should investors, I guess, how should investors look at the market ahead?
Well, I think we're seeing the very same thing you're seeing, which is there's all three. There's some investors that haven't been this excited in 3 years because they haven't been able to buy property at these prices in 2 to 3 years. So they're very excited. Then there's the others that are freaking out because they have, some problems and some challenges. And really, this is why we're hosting our upcoming event, SOS, Strategies, Opportunities, Solutions, is to address these three buckets that you're talking about, Dalia. I guess I'll speak to those that are sitting on the sidelines. There's for some people that are sitting on the sidelines, what we found is they're always sitting on the sidelines for a reason. And this is just the new reason why they're sitting on the sideline. You've seen this, right? And people watching this will say maybe they'll self-identify as, oh, maybe that's me. But what's funny is that in the last 2 years, people have said, oh, I'm not getting into this market. These prices are way too high. I'm going to wait until the prices come down. Then I'm going to go all in, or I'm going to start buying, or I'm going to do whatever. Now the prices are coming down. They're saying, no, I'm not getting involved. Not the prices are coming down. I'm going to wait till things level off. So there's always a reason to be on the sidelines. So I think being on the sidelines, unless you have a very specific reason to be on the sidelines, and it's a good one, which most of them aren't. I think 95% of people sitting on the sidelines should not be on the sidelines, in my opinion. But for me, it comes back to kind of how I open this segment for me, which is really a question of objective, and it's a question of timeline. If you have a timeline that is long enough, and if you're young enough, you should be nothing but excited right now. And this is actually a great conversation because Patrick and I are in very different positions. We're different ages. We have different objectives. Yeah. He's at the tail end of his real estate investing career. I'm in the middle of it, so to speak. I've been at it for 10 years. I still have easily 30 years of runway ahead of me. So it's nothing but exciting times for me. But Patrick's got a little bit different view on it because he's at a different point in his life. So, I think that has a lot to do with how people should be reacting to this market from my perspective.
Yeah, great point there of taking into consideration your personal plans and the runway. It's not a generic, get into the market or get out of the market. So that's a great reminder as well.
Yeah, I think too is that, it always boils down, Dalia, to the education. As you know, that's what we talk a lot about, is just the education and understanding what's really going on. Investors who are reading the headlines don't necessarily understand that the headlines are driven and focused on home buyers. We're investors. We're buying a piece of real estate that somebody else will turn into a home. We're not buying a home. It's a different view of the world. So when we talk about interest rates and we see all this panic about interest rates, I look at it and go, it's just the math. Do the math. It either works or it doesn't work. And ultimately, when we look at what's happening with rising costs, interest rates go up, yes. And what are we seeing? We're seeing rents across the country go up because demand is increasing. And so we look at supply and demand from an investor point of view is not going away anytime soon. We know that more and more renters are going to start showing up, whether it be immigration or homeowners who want to be homeowners but have to rent because of what's happening in the market from a financing point of view. So the point is that investors need the education to make decisions. Take the emotion out of it. Look at the data that supports your decision of why you would invest. And understand one thing, there was a lot of speculation that's happened over the past couple of years. That speculation is creating problems for those individuals. And if we as investors come in with the attitude of solving other people's problems, not taking advantage of people, but actually solving their problems, there's going to be lots of opportunities for investors who are savvy and come in with an approach going, we're going to solve problems. And that historically, over 20 plus years of watching investors, being an investor, I see that works consistently in these times.
And that's a good point there, Dalia. And you've seen this, you work with lots of investors, it's a big part of your business. Yes, there are speculators who made the wrong bets. If you go to the casino and you make a bet, it's going to be wrong 51% of the time. And there are speculators in the last 2 years that have made a lot of wrong bets. that doesn't mean real estate is broken, my friends. That means those people made the wrong bet. If you don't understand how to use real estate and how to work real estate and how to build a portfolio, it's on you as an investor to get educated. Real estate doesn't work. We like to say at REIN, real estate doesn't fail us, we fail real estate. And that's because people fail to educate themselves in real estate and how to use real estate effectively. That's on you as an investor to get educated. Otherwise, yeah, you can make some mistakes. And let me tell you, mistakes in real estate are very costly.
They're expensive.
Yeah. Fantastic points. As you were both discussing this last point, I wanted to ask you, are there strategies that investors should stay away from in the next 12 to 18 months from an investment standpoint for those who are looking to get into the market?
I'll take one kind of part of that particular question. I want to go back, and I can't stress enough, is that real estate is regional. So what you're doing in any region of Southern Ontario, and you have to look at, what's happening in the GTA, what's happening outside of the GTA, and then looking at, the economics of that particular region, saying, what is the demand and what is their demand for? I see one thing that and I know, you've got a very strong following in Ontario, and we're seeing in Alberta, Ontario money flow into Alberta. Investors that are...
You mean Albertario? We call it Albertario.
Yes, that's true. But here's a fundamental that I'm seeing. I'm cautioning people from Ontario, investors from Ontario, who think Calgary, not as much Edmonton, but Calgary has the same kind of appetite for condos that let's say the GTA has, that Toronto has, and it just doesn't. So I'm seeing money flow into Calgary, for example, and looking at condos, and I'm going, don't do it. Just understand what's going on. It's a different attitude towards that type of style of living. And if you want to live there, go crazy. If you want to invest there, I would be, my red flag of caution is very, very high there. So my point is back to the strategies. Look at the area that you want to invest in, look at what the demand is for, and demographically be clear on who you want your tenant to be, and then get into that area and then invest in a piece of property that is going to accommodate the demographic that you want to attract.
Yeah, I think that's a great point, Patrick, because to say that a particular strategy is not good is very difficult, because it really boils down to the region, right? Then it boils down to the property type. It boils down to the cycle, and then the tactic comes at the end. And see, a lot of people, and this is where the mistakes are made, Dahlia, is they put the tactic first. They say, okay, I'm going to do fix and flip, and that's all I want to do. Well, right now is not a great time to do fix and flip in Peterborough, Ontario. That I can tell you for sure, because I'm in Peterborough, Ontario. I know where the market's at, and I know now is not a time to do fix and flip. But that doesn't mean fix and flip's not good. It shouldn't happen. There's places in this country where fix and flip's a very good idea. It just so happens you shouldn't be doing that in Peterborough, Ontario right now. So I don't want to blackball any particular tactic. What I want to tell investors is, number one, make sure you do your research on the fundamentals of that region. Do your research on where the cycle is, whether it's in boom, slump, or recovery. Then match the tactic to the appropriate market cycle, and you'll be disproportionately successful. So, but I will caution, like Patrick, that right now in many markets, fix and flip is a it's a tough time to be doing fix and flip unless you're buying stuff at a significant wholesale price. And it's also a difficult time to be doing the BRRRR strategy, depending on your particular timeline. If you're trying to do a BRRRR that's 30, 60 days, it's a tough time. If you're trying to do a BRRRR for the next 6, 12 months, that's a different story. And that's why the question of, is a tactic good or bad? It's not a black or white question. It's actually, they're all degrees of gray.
Got it. Excellent perspective. Thank you. My last question is, are you currently, through the real estate investing network, offering tools that can benefit investors in this market? And if so, where can we find them?
Yeah, definitely. I mean, at the Real Estate Investment Network, if people are a part of this incredible community, which if they're not, quite frankly, I think they're crazy. I would never do this business on my own. I always want the expertise of someone else. I mean, to be supporting you. So at the Real Estate Investment Network, one of the things that's coming up like really soon is that in September 23rd, 24th, we are hosting our SOS, Strategies, Opportunities, Solutions, which is one of our big summits. We're probably going to have about 1,000 investors coast to coast on here. We have incredible economists. We have like 25 different breakout sessions. So we're not only tackling the economics and the big picture of where the country is from a real estate perspective, we're actually releasing research on where all the market cycles are in 53 different markets across Canada. And we're doing breakouts to actually get into the nuts and bolts of real estate and how to operationally be better than your competitors. So we're covering all that at the upcoming SOS. So I think that's kind of the first starting point if someone's not already a part of this community.
Yeah, and then just to expand on that, Dahlia, is that, that is that's one particular event. But back to JG's point, is that when you surround yourself with a like-minded community of experienced investors, trusted partners, people who are in the game, in the trenches every single day, it's a totally different perspective than having a conversation with your neighbor or the guy or the person that you work with about what they should be doing in real estate. Understanding that the market kind of subtleties, the nuances of the market are something that we have to pay attention to. And REIN National, we're a national organization. We've been around for 30 years. So we do understand these markets, and as investors, how do we support investors and give them the tools that they need, from the research to the analysis tools to the contacts with individuals like yourself. This is so important. You have to build that team, and all of that lives in our ecosystem.
And I think sorry, Dahlia, one last thing is I think right now is a time where some investors don't have some answers. And the word that I would pass on and to these investors that don't have certain answers and they're sitting there with looking for answers is just because you don't have an answer doesn't mean there isn't an answer. You just got to find the person that has the answer, because I can promise you we've been through many markets like this over the years, and these can be very, very phenomenal times for a lot of investors. Just because you don't have the answers doesn't mean there isn't an answer. You have to go find the answer.
Yes, it's the who can help you resolve or answer your question. And to your points earlier, surrounding ourselves with the right people, like-minded experience is so crucial in my view, not just for knowledge purposes, but mindset and morale and focus, because right now the news is just going full force with terrible headlines all over the place. And being with the right people makes all the difference.
It does.
Okay. Well, thank you very much for your insights and tips and time today. Such a pleasure. We really appreciate it.
Love it. Thanks, Dahlia.
Thank you.
Our pleasure.